So guys, what's up guys? Welcome to Living at Forex Academy. We are going to be talking about zones in the Forex market today. Zones are actually very, very important. Please, if you know that you haven't yet watched my previous video based off on market structure, go back to my previous video and make sure you understand what market structure is and how it works on the forex market before you dive into this video, please. Because if you don't understand what market structure are, you can never ever understand zones. I don't know if I'm making sense, guys. So let's proceed. First of all, when it comes to zones in the forex market, zones are actually very, very important. Like I said earlier, you cannot just come into this market and say that you want to buy from here or you want to sell from here. You must factor in market structure. After factoring in market structure, you factor in your zones. That's why I say that if you know that you haven't yet watched my previous video based off on market structure, please go back and watch it, because if you don't understand market structure, you will never ever understand what zones are. So guys, let's start real quick. First of all, ask yourself what zones. When it comes to the financial market, zone simply means, just as the name implies, zones, zones, zones. You can also call it point of interest. So guys, let's start. Just as the name implies, zones. What are zones? Zones, also known as point of interest, areas of interest. You can also call them levels. They're all the same, please. So today, all these names over here, they're all the same. You can also call it zones, point of interest, areas of interest, or levels. You can, let's say these are just like levels whereby once market touches or once market reaches so point, the market will start reversing from that place. So guys, let's proceed. What are zones? Zone simply means where you should be taking your trades from. Like, very simple. Don't twist things, don't elongate things. Like I always say, always make sure you keep things straight. Like, don't complicate trading or don't make things hard for you. Zone simply means where you should be taking your trades from. Where you should be taking your trades from. So these are just like where zones comes in. Like I said, please, if you know that you haven't yet watched my previous video based off on market structure, go back and make sure you understand the video, understand what market structure are first. Because you cannot just dive into these charts now and say that you want to start buying from here or you want to start selling from here. No, you must factor in market structure, guys. I don't know if I'm making sense. You must definitely factor in market structure. Market structure is just like the bedrock of every trading strategy. Market structure is the buzz of every trading strategy. Without market structure, you can never understand the languages of this market. Guys, I don't know if I'm making sense. Now, after factoring in market structure, what comes in your mind next? Zones. As I just explained, what are these zones? Zone simply means where you should be taking your trades from. Don't complicate things or don't make things hard for you. So when it comes to different types of zones in trading, so when it comes to types of zones in trading, we have different types of zones in trading. We have, guys, please pay good attention to me. Pay good attention to me. We have we have the Fibonacci zone. We have another block. We have FVGs. Guys, please pay good attention to me. We have trend line, and we also have trend line break pattern retest. A lot of them, we have the support and resistance, we have the supply and demand. But I will teach you guys everything so that maybe you can understand then as time goes on. You can choose the ones you want. We have support and resistance. We also have supply and demand. So guys, when it comes to trading, we have different types of zones. As I just said, we can also call it zones. We can call it point of interest. We can also call it areas of interest, and you can also call it levels. Please kindly know that all these names are the same thing. I don't want all these names to confuse you guys. I don't know if I'm making sense. Good. Now, when it comes to types of zones we have in the forex market, not just in the forex market, in the whole financial market generally, we have the Fibonacci zone. So, guys, let me show you guys something. We have another block. We have FVGs and imbalance. We have trend lines. We have trend lines break at break. One sec. We have trend line breakout and retest. So guys, we have support and resistance, and we also have supply and demand. But based off on my own personal experience, since I've been on this market for a very long time. So guys, I will tell you guys that all these zones I just listed out here, all these zones I just listed out here, please, from my own very own perspective, like from my own very own perspective, I will tell you that not all of them works. Guys, I don't know if I'm making sense. From my own very own perspective, all these zones are just listed out here. Fibonacci, order block, FVGs and imbalance, trend line breaker target, support and resistance, and supply and demand. So guys, I want to tell you guys that from my own personal experience, from what I've found out and observed on this market for a very long time, I will tell you that not all of them works. Guys, I don't know if I'm making sense. So when it comes to zones, Fibonacci zone, order block, FVGs and imbalance and trend lines. Trend line breaker and retest, support and resistance and supply and demand. Please note, all these zones are just listed out here. I'm just trying to tell you guys how they look like and what they are. But based off on what I've come to realize on this market, all of them doesn't work on the financial market. So today, the only one I'm going to be talking about is Fibonacci zone. Fibonacci zone. Fibonacci is actually one of the most powerful. Fibonacci is actually one of the most powerful tool in the financial market. So it's more or less like Fibonacci is actually used to catch retracement on the chart. So guys, I don't know if I'm making sense. Like I said, all these zones I just listed out here, not all of them works accurately. I don't know if I'm making sense. Today, the one I'll be teaching you guys is Fibonacci zone. Because now, if I decide to teach you guys everything, it might take time. So today, I will just be teaching you guys Fibonacci zone. Guys, I don't know if I'm making sense because there's no essence of me teaching you guys what doesn't work. Guys, I don't know if I'm making sense. So guys, today we're going to be talking about the Fibonacci zone. First of all, ask yourself, what are Fibonacci? What are Fibonacci? What are Fibonacci? First of all, ask yourself what's a Fibonacci? Okay, Fibonacci simply means it's just like a two. So guys, please pay good attention to me and look at my screen. Can you see my cursor? These two up here, the fib retracement tool. This is what I'm talking about. So guys, let me show you guys something real quick. This two right here is just like a two. It's just like a two used to catch retracement on the chart. Guys, I don't know if I'm making sense, but pay good attention to me. Please don't trust the process. I don't know if I'm making sense. This two is just like a two used to catch retracement on the chart. Guys, I don't know if I'm making sense. So let's proceed with this session. So when it comes to the Fibonacci tool, like I said, please, if you know that you don't understand or know what market structure are, I want you to go back to my previous video. I keep saying this. If you don't understand market structure, you can never understand zones. Guys, I don't know if I'm making sense. So when it comes to the Fibonacci level, Fibonacci tool, sorry, when it comes to an uptrend, remember I taught you guys that what classifies an uptrend? Series of higher highs and higher lows, right? Series of higher highs and higher lows. Higher highs and higher lows. As for our uptrend, lower highs and lower lows. That's for a downtrend. So guys, when it comes to using your Fibonacci tool, when it comes to an uptrend, pay good attention to me, guys. I repeat, if you know that you haven't yet to watch my previous session based off of market structure, please go back to my previous video based off of market structure and make sure you understand what market structure are. It's very, very important. So guys, let's proceed. When it comes to using your Fibonacci tool in an uptrend, when market pushes up, this move to the upside, this move to the upside. Remember, I told you guys that this move to the upside is called an impulsive move. Why this move to the downside? This is just like a short-term move against the trend, which is retracement. Guys, I don't know if I'm making sense. Now, pay good attention to me. We have this guy up here. This guy up here is the resistance level. So, in a scenario where market comes and take out this guy up here, I taught you guys this is called the break of structure, right? I don't know if I'm making sense. I taught you guys this is called the break of structure. If let's say now market pushes up now, fails to break this guy up here, fails to break this guy up here, please sit out. This is called a manipulation. Until market successfully breaks above this previous high. That's the body of a candlestick. Pay good attention to me, guys. That's the body of a candlestick. Closes above this guy. That's the bottom of a candlestick closes above this guy, this previous high. Once the bottom of a candlestick successfully closes above this previous high, this is called a break of structure. And you can also call it higher high. Guys, I don't know if I'm making sense. So market has successfully broken this high to the upside. So now pay good attention to me. When next we have the next candlestick retracing to the downside. Remember I told you guys this move to the downside here is just like a short-term move against the trend. While this move to the upside is just like a long-term move in the direction of the trend. That's for an impulsive move. Why for a retracement, short-term move against the trend. So when next we have this next candlestick here, pulling back. Guys, let me teach you guys something again. This move to the downside here, this move to the downside here, we can also call it a retracement. Pay good attention to me, guys. Retracement. We can also call it pullback. We can also call it a test. and you can also call it a correctional move. So guys, all these names I just listed out here is just like one word. This move to the downside here is just like a one word for this move to the downside. This move, this particular move to the downside, this move to the downside, this move now to the downside, just like a one name for all of them. Retracement, pullback, retest, and the correction move. That all of them are all the same thing, guys. I don't know if I'm making sense. So when next you see this next candlestick, this next guy, after we have successfully gotten a break of structure, when next you have this next candlestick retracing to the downside, now, as a smart trader you are, you pick up your Fibonacci tool. You start from the lowest week. I repeat, lowest week to avoid manipulations on the chart. Always start from the lowest week of this higher low. Guys, pay good attention to me. You plot your Fibonacci. Guys, I will still show you how to set up your Fibonacci to just, I want you guys to relax and pay good attention to this video first. So you plot your Fibonacci tool from this lowest week of this higher low. You extend your Fibonacci to the highest week of this higher high. Now, as a smart trader you are, what are you expecting? You map out your Fibonacci. You map out your zone, your Fibonacci zone, somewhere around here. Then what are you waiting for? You are waiting for the market to come and retest to this guy down here. Who is this guy? The 0.618. So I'll still teach you guys entries, the basic ways to enter the market and other ways to enter the market. But I don't want you guys to rush. It's a gradual process. I don't know if I'm making sense. Good. So when this market touches this guy down here, you buy. But I don't want you to enter aggressively. There's an entry confirmation you normally watch out for, of which I will teach you guys entries and entry confirmations on my next video. I don't know if I'm making sense, guys. Then you pick your price and ride the market to the upside. Now, as a smart trader you are, if you observe now, you see that once you pick this buy to the upside now, the market has successfully created another impulsive move. If market pushes down again, that's it retraces to the downside, you still pick up your Fibonacci 2 again and start from the lowest week. This guy down here and extend to the highest week. Guys, this is very, very simple. I don't know if I'm making sense. I'm not trying to say it's very, very simple, but as time goes on, when like as time goes on with screen time and everything, trust me, it's gonna be very, very simple, guys. I don't know if I'm making sense. So that's just it. Now let me show you guys how to set up your Fibonacci tool. When it comes to you guys setting up a Fibonacci tool, pay good attention to me. This is just like a Fibonacci. When it comes to you, guys, one sec. So, guys, when it comes to you setting up a Fibonacci tool, when it comes to, remember I told you guys that when it comes to an uptrend, you should plot your Fibonacci from the lowest week of the higher low, you extend to the highest week of the higher high. Then for a downtrend, you start from the highest week of that lower high, you extend down to the lowest week of your lower low. Guys, I don't know if I'm making sense. So I think when it comes to you setting up your Fibonacci, this should be your, I think, I think your default should be something like all these settings, all these second, third, fourth, and all these settings here should be on. But guys, please, I don't want you to fuck with all those things. This is the only thing you're gonna do. Just these first settings, pick it up and edit it to 0. And this second one, this minus 0.27, you turn it off. This third one, you turn it off. This fourth one, you turn it off. This fifth one, this guy, this fifth one here, this is your main Fibonacci, your 0.618. You edit it. I think it should be somewhere around default is 0.67, but your default should be around 0.618. Then this guy, you edit it to 0.79. This guy, You edit it to one, then the rest, don't fuck with the one like you these ones. Then the most important thing here is that these levels, you head over to these levels and select values. These labels, select it to right, and this one middle, then your text center, and this one right here middle. These are very, very important. So guys, I want you to go back to my YouTube video and like take a look at my Fibonacci settings, guys. I don't know if I'm making sense, guys. So these are very, very important. So guys, that's it. That's very, 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 very simple. So when it comes to using your Fibonacci in a downtrend, it's just like the inverse. That's like so guys, when it comes to using your Fibonacci in a downtrend, it's just like the inverse of everything I just said. As I said, if you know you haven't yet watched or maybe understood what market structure are, please go back to my previous video and watch them, please. Market structure is the bedrock of every trading strategy. You can never know or understand what these markets are doing if you don't know what market structure are. After you picture a market structure, this is where your zones comes in. Who are these zones? Where you should be taking your trades from. Guys, I don't know if I'm making sense. So when it comes to you using your Fibonacci tool in a downtrend, just like the inverse of everything I just said, we have this guy down here, this low, we have this lower high, we have this lower low. So when next we have this guy, you're chasing to the upside, you pick up your Fibonacci tool and start from the highest week of this lower high, you extend down to the lowest week of this lower low. So guys, that is it. It's not so hard. You just have to practice and as time goes on, you will become the best on it. So guys, I please, if you come across this YouTube channel, I want you to subscribe. It's very, very important. Like, subscribe and share. So cheers up guys.